Hey, what's good, y'all? It's C Will, and this is the Passive Income Network. On this podcast, we talk about investing in assets that produce passive income. Make sure you hit that like button, subscribe, and leave a comment and say what's good. On this episode, we have a special podcast feature with Mr. Jason Brown. Jason, welcome to the show.
See, Will, thanks for having me, man.
Thank you. Thank you for tapping in with the Passive Income Network. Been looking forward to this one.
Yeah, me too.
Excellent. So let's dive right on in. Can you let the audience know who you are and tell them a little bit about yourself?
Yeah, absolutely. So, Jason Brown here, hailing from Detroit, Michigan. I'm a stocks and options trader and primarily an options coach. So, I trade my own money and then I teach people how to trade stocks and options and kind of take control of their financial freedom. And, I got started in this industry just growing up, being a poor kid from Detroit, was always looking around and wondering why we didn't have money. And at a very young age, I was just aware that we didn't have money, not because, my mom didn't take care of us or anything like that. But
Yep.
for example, when I was younger, I went to my best friend's house and I was like, wow, you have a bed. And he was like, of course I have a bed. Like, what are you talking about? And we slept in sleeping bags. And so I was like, I thought beds were for grown-ups. And so at a very young age, I started to realize, like, wow, we didn't have enough money to afford beds for whatever reason. And so I just started noticing that there was differences in in wealth and in the type of money that people had. And so I started really early on trying to figure out how could we change our life for the better. My mom worked two jobs, and so I thought he had a mom and a dad, so they had two incomes. That was why he was able to have a bed. But I saw my mom work two jobs, and it's like she has two incomes, and we still don't have any money. So I knew that that wasn't the answer, and that kind of led me down the road of learning about investing and reading books and different things like that.
Okay. Thank you for that. Just a follow up. Are you like professionally trained or work for any like firms, or are you self taught that type of path?
Yeah, so I'm technically self-taught. And the reason I say technically self-taught, I actually studied to get my Series 6 and 63 and started to study up under joining a firm. And then once I understood how they actually help people, and no disrespect to anybody that works at a firm, but I realized that they weren't helping the people like me. In fact, when I was about to take the test, there was a couple of things I noticed. Number one, anything that I said or did would have to get run through compliance, so I couldn't
Mm,
speak freely and talk about how money really works, which I thought was interesting.
that is.
Um, they wouldn't let you really say how it works. It's like this got to get approved. And the other thing I noticed was that when I went to go work for a big firm, I never got that job, thank God, because I just bowed out of it. But they wanted me to make a list of everybody in my family that made like or had at least $250,000 in cash. And there was two problems with that. Number one, I didn't know anybody who had $250,000 in cash. Number two, if they did, they didn't talk about it in our family, right? They weren't just like, I'm sitting on $250,000 cash. But it made me realize like who helps the people like us who don't have a 250,000. I'm like, if I was able to figure out how to get a 250,000 cash, I probably don't need you. I can figure out how to do
Exactly.
it four more times and become a millionaire. And so that left me to really be passionate about helping the underdog and the underbanked and the underprivileged.
Man, makes sense. Listen, I started this channel before myself mostly, and I was like, man, I gotta learn how to do these things better and really maximize my money. So yeah, kudos to you for figuring it out. Can we dive in a little bit about today's market? Did you see what kind of happened with Nvidia and some of the tech stocks and mostly semiconductors?
Yeah, yeah. Nvidia had a nice pop today based on earnings and what they're projecting because of AI. And inside, like our group Power Trades, where we talk about stocks, options, and what's going on with the market, a lot of people made some money off of that stuff. But what I think is important to understand about that is people may be thinking, how could I have profited off of that before it happened? And I tell people it's just like real estate. And when you're looking at real estate, you're researching what state are people moving into. Then it's like what area or what city are they moving into? And then in that city, what neighborhoods are booming? And I think the stock market is the same thing. So when you look at it from what state people are moving into, they're moving into the tech sector. And then you look at what city, it's like AI is all the rave, right? Artificial
Yep.
intelligence, from voice, from text to speech, from, you know, chat GPT, all those things. And then you drill down into what neighborhood are people moving into. And that is, they're going to need computing power. They're going to need server space. They're going to need semiconductors to run the
Mm,
computers. So when you look at it from that type of lens, you start to say, okay, who are those companies? The AMDs of the world, the NVIDIAs, the Microsoft who owns Azure, where they can host the space, the server space, the AWS, the Amazon Web Server, where all this data and information has to be stored. So you can kind of, when you look at it from that lens,
yep.
start to understand where you should focus your finances and your investments, on what states, what cities, and what neighborhoods is the money and is the technology going into next that is going to be the next boom.
And that was a wonderful breakdown.
Yeah.
Definitely. I haven't heard that take on it of the more of the real estate approach that you break down. So that was dope. Before we talk about Power Trades University, I want to talk about that. Can you give us like a macro outlook right now? Hearing rumors that basically we're in a bull market and the bear market is essentially over. But I do know, as you said, Nvidia, Apple, Microsoft, there's only a few companies that are really bringing the market up. Can you talk about it?
Yeah. So the market moves in three different directions, right? So it moves up, down, and sideways. There's only three different directions that it can move. And if you really understand the phases of a market, if you look back when the market dropped in 2020 when the pandemic hit, we basically shot up for the next year from 2020 to 2021. You had
Yep.
stimulus coming in, you had student loans being forgiven, being paused, you name it. We had the government, you know, buying bonds and pumping the market full of money. So we had this rally. So we get the up phase. Typically, what follows the up phase is a sideways phase, meaning we've kind of hit this peak where it's like, unless some more good news comes in, there's no real reason for things to go higher, right? And
Yep.
so things kind of level off. And then you hit a point where you're like, there's no one left to buy this stuff. And we start selling off. So, for example, everybody and their mother had a Zoom account. So there was no one left to really get a Zoom account. There was actually only thing left was people to start canceling Zoom accounts as they start to come back to work, come back
Mhm.
to office, start doing church in person, etc. So they captured all these customers and they hit a peak. There's no one left really to sign up for it because everybody and their mother had one. So only
Yep.
thing left is for people to start leaving. So then you get the decline. Once you get the decline, then you get the overreaction. This company's going out of business. No one uses their service. So then you get what happened is like it's oversold. Once it gets oversold, we kind of hit a level where there's fear. How much further is it going to go? But
Mhm.
it kind of stables out and builds that sideways base. That's what we've been in for a little bit of while, is that we've done falling and we started going sideways.
Trading sideways.
Now we're starting to enter the next uptrend now that the market has reset, right? People got laid off, interest rates are at an all-time high. You name it, right? All the expectations for earnings, everything has been reset, but they were reset to be so negative that now once companies start to meet or beat again, everyone's like, wait a minute, maybe we were too negative about this company, right?
Mhm.
And now everyone's kind of rushing back in. And first you have the big money that starts to buy back in. Then you start to have retail investors say, how can I get a piece of it? So you have that money that they call on the sidelines that starts to come back in and push it back higher. So we're just trying to break out of our sideways trend. I don't know that we're in the uptrend or a bull market just yet, but we're
Mhm.
definitely done falling and we're going sideways where we built a base and maybe getting ready to head up next. And next could be second half of this year, it could be early 2024, but big picture, we're done falling, we're done going down. And you can also see that when every time the Fed raises the interest rates, we're no longer selling off on that news anymore. Like
No, not at
usually when they
all.
raise interest rates and talk about the debt ceiling and all this and that, we tank. Now we may be down for the day and then rebound before the day has ended because now all that news is pretty much baked in. And we're like, look, this is the worst it's going to get. No one's gonna not buy a car because of a half a percentage point at this point. Like,
Yeah.
doesn't matter if it's 5.5 or 6% or 6.5, it's roughly the same. We already took the hit going from 3% up to 6.
Hmm.
Now, whether it fluctuates to 6.5, 7%
Don't really
doesn't
matter.
matter as
Yeah.
much. The only place left now is for interest rates to start coming back down. And real investors want to get ahead of that before rate starts coming back down. And then again, the retail investors eventually come off the sidelines.
Yeah, that makes a lot of sense. Okay, so can you tell us about Power Trades University? You have a lot of information. Seems like you have a great understanding of the market. Can you talk to them about what's Power Trades University?
Yeah, so Power Trades University is my own online university that I started. And the reason I chose the name Power Trades University, I went to school, I went to Wayne State University, which is now the Mike Ilitch School of Business here in Detroit.
Okay.
And I thought about how people learn. And people are used to going to school or going to university. But when it comes to the stock market, for some reason, people are like, we're used to paying $50,000, $100,000 to go in debt to get a piece of paper. But for some reason, when we talk about going to school to learn the stock market, we feel like I can learn that on my own. I can learn it on YouTube, or why would anybody pay for that information? Which I thought is kind of funny. And so I was like, why don't I mirror something that people are used to? They're used to going to college, they're used to going
Hmm.
to a university. Let's make a university for the stock market, but let's teach people how to build wealth, not go into debt for $50,000 and then get taught some outdated information that by the time they graduate may not even be in use. How do we teach them how to build wealth in the stock market? And so it's really based on three principles, which is coaching, courses, and community. And so you need the courses to understand the language. What is a call? What is a put?
Hmm.
What are stocks? What are options? And that's where the word power comes from. Most people can't afford some of the best stocks. And so they don't get involved in the best stocks. They just buy the cheapest stocks that they can get. But we teach people to use options so that they can take the little money that they have and put a lot of power behind it and control some of the most powerful companies for a fraction of the cost. So that's where the word power and Power Trades
Hmm.
University comes from. But you need the courses to understand that. Then you need the coaching. So after you understand the courses, it's like, how do I apply that in the real market? How do we go through that analysis that we just did to find the stocks like NVIDIA or where the money is going to be flowing next? And that's where the live coaching comes in. So I go live, I look for real trades in the real market with my own money. I'm
Hmm.
analyzing the market real time. So you have that historical view from an education standpoint, but you have live coaching, which is how do I apply it in the current environment? And then there's community. We like to say a trader alone is a trader at risk. And so many people start investing or trading by themselves. And what happens is they don't have anyone to bounce any ideas off of. They don't have anyone to say, I'm looking at this chart. I'm looking at this company. What do you think? And they're not paying attention, or they don't have anybody else to
Hmm.
come in and give them an opposing view or say, did you see this? Did you know that they have earnings coming out? And so we put together one of the most powerful communities where traders can talk to each other, post their charts, get feedback. If you're down on the trade, you can go in there and get encouragement. You can also get strategies on how to repair a trade, but you're just not alone. And that's the whole premises of coaching, courses, and community behind Power Trades University.
Amazing. How long have you been doing this with Power Trades University? And we're gonna jump into how can someone get involved, because that does sound like an amazing. I'm actually interested myself. I've been trading options, and I take courses. I do those same things. I found the same thing what you broke down is college, university, 50, 60, 100,000, but nothing's really guaranteed. But what you're talking about over here is skill sets like carpentry, but in the stock market, and I think that's dope. So yeah,
Absolutely.
how does one get involved, and what's the process like joining Power Trades University?
Yeah, so the thing I like to tell people first, it's easy to get involved, get a credit card out and purchase, but I'm not here to sell anybody anything. I always like to say I'm not the only university on the street. Well, I am the only university, but there's other
Yeah.
online coaching communities. But what I think is important first and foremost is before anybody gets out their credit card and just buys something or joins something, make sure you resonate with the teacher and make sure they're explaining it in a way that you understand it. I like to tell people, if you like what I'm saying here, great. It's going to be more of this. If you
Mhm.
don't like what I'm saying here, you don't like how I talk, you don't like the sound of my voice, then I'm not the teacher for you, because it's just going to be more of this, more Jason Brown, more coaching, more courses from me. So make sure you find a teacher that you understand and that you can learn from and can communicate how you like to be communicated to. And so that being said, I always tell people, check out some of my free stuff first. Like on
Yep.
our website, thebrownreport.com, you can download like our stock market starter pack or a stock option starter pack if you're brand new to options and don't really understand it, and start saying, man, I like how this guy put this together. I like how he explained it. I like the videos. This makes sense.
Mhm.
Then ask yourself, do I want to go deeper and do I want to learn this faster with help and with the help of a community? Because that's really what you're paying for. Sometimes people say, I can learn this stuff on YouTube. And to be honest, you could. The
Yeah.
problem with learning it on YouTube is I'm not on YouTube answering every question in the comments, right? So you can watch a YouTube video, but where do you go when you have a question? Where do you go when that trade is going against you and you're like, I'm down $3,000? What do I do? Do I close it out? Do I repair it? That's what you're paying for from the coaching and from the community aspect. And then from a course standpoint, maybe you can watch 50 YouTube videos and eventually figure it out. But the courses you're paying for, like, tell me what I need to do to get up and running in the next 2 weeks to 30 days and be trading. Not
Yep.
this guy said this guy said that, this guy said trade option, this guy says options are risky, this guy says Bitcoins, this guy says day trade, this guy
Yep.
says penny stocks. Dave Ramsey says pay off my credit cards. You're all over the place,
I
right?
mean, that's
So
exactly what it is right now. Information overload.
overload. So that's what you're really paying for when you start to look at a course. So really ask yourself, do I like the teacher and how they explain it? B, do I want to go faster? C, do I want to be part of a community? And D, do I want to have somebody I can banter with and go back and forth with and ask questions when I'm confused and when I'm stuck? And if the answer to those are yes, then you just kind of look at the site and pick which plan you want.
Tap in. Yep. Excellent. Okay. Can you give a little advice or pointers for someone who's not completely new, right? Like they've traded a few options, made a loss of money, maybe made a little money, but they want to improve themselves. Can you talk to those people?
Yeah. So most people, when you look at the stock market, it moves in three different ways, which we talked about a little bit: up,
Yeah.
down, and sideways. There's always three different peoples, and there's kind of like three different personality types too, right?
Yep.
So the three different peoples, first person is like they only know how to make money if the stock market goes up. That's usually the first person you encounter, right? I was
Yep.
doing good in 2020 when everything was going up. Then when it wasn't going up, they're like, I don't know what happened. I just gave it all back. And think about the stock market as a math percentage. If it can go up, down, and sideways, that's 33% it can go up, 33% it can go sideways, 33% chance it can go down. That's 99.9%, roughly 100%.
Hmm.
If you only know how to make money if it goes up, then you only know how to make money 33% of the ways that the market can move. So you're 67% at risk of losing money, because when it's going sideways or down, you have no idea what to do.
Hmm.
So for that person, I would say understand how to use put options, understand how to do what we call covered calls, understand how to lock in your bank account so that it can never fall through a certain amount with put options. There's different strategies that you can use. Then there's the person who is kind of the gambler, right? I just hang out in Reddit forums, or like I was getting my hair cut at the
Day
barber shop
trading.
and
Yep.
everybody said buy Dogecoin because Elon Musk tweeted it. That's kind of the gambler, right? And they just look at the stock market like it's a Las Vegas casino table. And to
Mhm.
that person, I would say you don't have to gamble. Once you learn the way to analyze markets and industries, like I just broke down, AI, tech sector, then AI, and then
Yep.
who makes the chips, who owns the servers. You can start to make a more educated and calculated, because this is all about calculated risk. There's no way I can guarantee 100% you'll make money, but you can put the odds in your favor of where the money is flowing. And you can
Hmm.
say, I believe the money is flowing into these stocks and they're going to rise for these reasons. And so you don't have to, that's not a gamble. That's now calculated research and taking calculated risk. And so if you can kind of move from gambling and move over to more research and calculated risk, you can put the probability and statistics in your favor to be profitable. And then you got the third person, which is kind of two in one. They either they have two emotions that they haven't mastered, which is fear or greed,
Oh,
right?
yep.
The person who fears is like, I want to invest, but I can't lose any money. I'm so afraid of losing money. And to that person, I would say you're already living failure, right? Like whatever money you make right now, whatever lifestyle you have, you're living failure. Meaning, if you don't invest, this is what your life will look like right now. So there's nothing to be worried about. But if you do invest, what could it look like? And then you have the opposite side of they like, I invest, I know what my life can look like, but they're greedy, right? They'll be up $1,000 and they'll be like, but I wonder if I can go up $10,000.
Never sell
And
it.
it's
Yep.
and that's where my shirt comes from, right? So you never
Yep.
go
Never.
broke taking the profit. And so if we can just get people to realize that I'd rather you be up $1,000 and take profit, because if you do that 10 times, you're up $10,000
Facts.
versus trying to take one trade and hit a home run and be up $10,000 on that one trade. And then you end up giving 1,000 back and then you go negative. And
Mhm.
so that's what I would say to kind of the three different types of people.
Great information for my audience. Make sure y'all pay attention, double back, watch this again. Most definitely. Great information. Okay, we're gonna slowly start to close out, but I still want to talk about financial literacy a little bit. Can you give some pointers and advice of how does one even put themselves in that mindset to even believe they can make some money out the market?
Yeah, so financial literacy is it's funny you bring that topic up, see Will,
Hmm.
because me and my assistant, we were just here making some phone calls. We were talking to some people about our higher end mastermind program, and
Yep,
I won't use their names because I believe in confidentiality, but I
most
will use
definitely.
the scenario. And
Hmm.
what's interesting is, as we talk to a certain individual, I'll give you a specific example. I talked to a guy who was like, I want to join. I want to do this, but I just paid off $160,000 of student loan debt in cash. Now, Dave Ramsey would
Right.
be like, "Oh my gosh, congratulations! You just paid off $160,000," and like he'd be ringing the horn and
Yes.
throwing in the confetti. But I said, "Let me ask you something. What was the percentage on that student loan that you were paying?" And he told me 3.5%. And I said, okay,
Mm,
do you realize in this current environment, you can't get a loan for less than like 6%, whether that's on a car, whether that's on the house, everything is 6 to 7%.
facts.
So literally you had a 3.5% loan. So you could have took that and bought a property. You could have put it in the market and did some covered calls, covered puts, and made more than 3.5%, and then took the difference and then just made your monthly payments on your student loans. So that person paid off 3.5%, but if they wanted to go get money today, they'd have to borrow that 6% or 7%. So
Mm,
that's what I mean when people say financial literacy. It's
mhm.
understanding that I can out earn this low interest rate versus what the Susie Ormans and the Dave Ramseys of the world are preaching to me. Go pay off this low 3.5%. But now, where's he going to get 160,000 cash again from for an opportunity?
Nowhere. And like what you
I,
said, you named a lot of different options of what someone can do with that type of money. And I
he could have
agree
bought
with
a
you.
house. He could have bought a house for cash for 160 and rented it out for more than
Facts. Yeah.
3%, right?
Like
Now, if he wants
he
to
could
get a
have did
house, he's
bonds
going to get a
maybe.
mortgage at
Hmm.
6%. And so
Yeah.
I didn't mean to cut you off,
Oh
but
no,
people
no,
don't.
you good. We just talking. I'm like, anything would have been better because I'm like, you could have bought some gold bars and it might have appreciated.
It's just you have to
It's
understand three and a
crazy.
half percent is low.
It's
That's
low.
nothing,
Yeah.
right?
Yeah.
Compared to he could do hard money lending.
Yep. He could
He
have
could
got
do
a
hard
life
money lending
insurance
right now.
policy, could have did a whole bunch of things.
So
Man.
so that's where the financial literacy
Mhm.
piece comes into place. And let me give you another one because some of your audience may be listening, like, well, I don't have $160,000, so that goes right over my head. So I'll give you another one.
Mhm.
This is one that's just not taught in school, and I've done this for years. Most people don't do this one simple thing. Take a look at your car insurance.
Yep.
when most people get car insurance, what deductible do they select?
Usually the lowest cost, right?
The lowest deductible. Most people like, give me the $500 deductible. 9 times out of 10, that's the worst decision to make. Because here's why. Most people don't understand. If you select $1,000 deductible, maybe your insurance drops by $50 a month.
Mhm.
So if you save $50 a month on your insurance and you times that by 12 months, you save $600 in a year. That's $600 plus the 500 you would have to pay for the deductible. You just set that aside. Now you have the money if you get in an accident to pay $1,000 car accident.
Yep.
Then I ask people, when's the last time you've been in a car accident? Like 5 years ago.
Yeah, most
So you
people
could have
can't even remember.
so
Yeah.
you could have been saving $600 a year times
Yep.
5 years, which is $3,000. You could have started your investment account right there. So I have $1,000 deductible on all my vehicles because I can't tell you the last time we've gotten an accident. Plus, I have $1,000 to pay the deductible, but more importantly, we got like 3, 4 cars. So I
Mm.
mean, if we're saving $50 per car, we're saving $200 a month. So people are overpaying because they don't want to pay $1,000 deductible, but they're overpaying every single month, right? So it's like, but my deductible is only $500. But if you look at the last time you've been in an accident,
Mhm.
you probably paid $3,000 if it's been 5 years and you're trying to save a $500 deductible, right? So just little stuff like that, man. It's just numbers. Once you understand numbers, you start to realize, like, wait a minute, what am I missing here?
Mhm.
And your insurance company's not going to explain that to you. They're like,
Oh.
which deductible do you want, 500 or 1,000? Your brain automatically goes the lower one, right? But most people don't stop and say, well, what's my monthly premium if I go with 1,000? Usually you save about $50 by going with the $1,000 deductibles. Something just that simple could save you $500-600 a year.
Yeah, and that definitely takes an understanding to really think about those numbers and to see that most of us are leaving money on the table essentially by making the wrong decisions. Simple as car insurance. I got to go look at my car insurance now. Like
And then
straight
one
up.
one other thing that people can do, people always sign up for like these I said I was going to do a personal finance course because I'm like nobody's really teaching this stuff, but people sign up for all these debt consolidation things, and as long as your credit isn't too messed up, a lot of times you could just open up a 0% 12-month interest credit card, 0% interest for 12 months,
Mhm.
then just take all those higher price credit cards and transfer them to that one. You got 0% interest for 12 months, and now you're not paying interest on 3, 4, 5 different credit cards. You can take the money you're saving on interest, double up your payments, get out of debt quicker. I mean, there's all these little nuances, things you can do when it comes
Mhm.
to financial literacy, but you have to be trained to think like that. And most people aren't trained to think like that. They're trained to think there's no way out. I don't know how I'm ever going to get out of this. And then you kind of freeze and you get stuck or you get suckered into,
Mhm.
some bad situations. But the more we can think about money in terms of numbers and saying like mathematically, what makes sense, the better off we'll be. And most people, unfortunately, when you bring up math, the number one thing they try to say is what? Like, I'm not good at math. And I think that's just the
That is,
lie that
yeah.
people tells themselves because I say
Mhm.
if you go to the grocery store with $20 and they charge you $2 for something, you're supposed to get $18 back. If they give you $10 back, do you say, it's okay, I'm not good at math? No, you'd be like, where my other $8 at? So you good at math when you want to be good at math. So don't use that excuse.
No, that's the truth because most of it is elementary anyway. You will recognize that. Where the rest of my money at?
Exactly.
Facts,
So
yeah.
people just use that excuse. I'm not good at math. Don't tell me that. You okay. Give me $20 and let me give you $2 back. All of a sudden you good at math.
Every time. Okay, Jason, thank you. I want to say thank you for this. This has been a great podcast. I definitely would love to have you back on the show. I like the way that you explain what's going on, basically. And you gotta have a good teacher, y'all, for real. So Before you go, again, can you tell them your website, where to find you, and any other last words you want to put out there?
Yeah, absolutely. First of all, thanks for having me on. I just hope I was able to serve your audience and just hoping open
Most
one
definitely.
person's eyes up to thinking differently about money and how money works. And the best place to find me is thebrownreport.com. I'm Jason Brown. So just go to thebrownreport.com. From there, you can check out our free PDF downloads like how to get started in the stock market or our option starter pack, my YouTube channel, Instagram. It's all there at thebrownreport.com. And I always like to sign off saying, remember, you never go broke taking the profit.
Hey, thank you. That's great. And on that note, y'all tap in on the next video. Make sure y'all hit that like and subscribe, and we'll see you on the next one. Peace.